The Japanese yen has slipped against the US dollar in early Asian trading on Thursday, as a stronger greenback and rising energy costs weigh on the currency's performance. The USD JPY pair is trading near 151.8, signaling a modest but meaningful shift in market sentiment. This decline reflects broader macroeconomic factors, including the dollar's strength and Japan's vulnerability to global energy price fluctuations. The dollar's strength is being fueled by expectations that the Federal Reserve will maintain higher interest rates for longer than previously anticipated. Recent comments from Fed officials and resilient U.S. economic data have reinforced this outlook, reducing the likelihood of a near-term rate cut. As a result, the U.S. dollar index, DXY, has extended its recent rally, with investors favoring the dollar over other currencies, including the yen. Japan's currency is particularly sensitive to the interest rate differential between the U.S. and Japan. The Bank of Japan, BOJ, has maintained an ultra-loose monetary policy, contrasting sharply with the hawkish stance of the Fed. This divergence has. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Contributed to the yen's decline, as higher U.S. rates make dollar assets more attractive to global investors. Beyond interest rates, rising energy prices are adding pressure on the yen. As a major importer of crude oil and liquefied natural gas, Japan faces a growing import bill as global energy prices remain elevated. Brent crude is currently trading above $85 per barrel, with geopolitical tensions and supply concerns keeping prices high. This external cost burden is compounding the yen's vulnerability, as higher import costs worsen. Japan's trade balance and reduced domestic purchasing power. The yen's weakness is not just a function of monetary policy or energy costs, it is also a reflection of broader market sentiment. Traders are increasingly favoring the dollar amid global uncertainty, including ongoing geopolitical tensions and economic volatility. The yen, often seen as a safe haven currency in times of crisis, is struggling to maintain its traditional role as investors seek higher-yielding assets in a rising rate environment. For currency traders, the current environment presents a challenging outlook for the yen. The BOJ has shown little indication of shifting toward a tighter policy stance, which leaves the yen exposed to continued dollar strength. At the same time, the yen's sensitivity to energy prices means that any further volatility in oil markets could amplify its downward movement. The next key signal to watch is whether the BOJ will signal any policy adjustments in the coming months. While the central bank has been cautious in its messaging, any shift in tone could have. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Immediate and significant effects on the yen's trajectory. Traders will be closely monitoring upcoming BOJ statements and minutes for any hints of a policy pivot. In the meantime, the dollar's momentum is likely to remain intact, supported by strong economic data and the Fed's tightening bias. The yen's performance will depend on how these factors evolve, particularly in the context of global energy markets and central bank policy decisions. As such, the yen weakness is a key indicator of broader market dynamics and investor sentiment.